Hello, ladies and gentlemen. Welcome back to another video. Today, we have an urgent market crash update for you guys. But first things first, this is not financial advice. Anything I say in this video is strictly opinion content. I am not a licensed financial advisor, and I'm glad we have that understood and out of the way. Total sarcasm at the beginning of this video. I mean, I think it's hilarious. Everyone's freaking out. The market's crashing, this and that. Crypto, it's falling off a cliff. And, I guess you might feel that way if you bought it at the top, if you bought it at 126, and now we're down here. But it's not crashing. And I hate to rain on anyone's parade that thinks it is and this, that, and the other. But the topic of today's video is that would be, ironically, one of the best case scenarios for GameStop Corporation humanly possible, because they're sitting on close to $9 billion in cash to deploy. And Ryan Cohen has been beating this drum interview after interview after interview. What has Ryan Cohen been saying? The capital markets don't even flash yellow from going green to red. And we're waiting for a pitch down the middle. So in the event that the market actually did crash, and let's just take a look at SPY here, because I can say this ad nauseum for you guys. SPY is down 3%. Okay, $22 on SPY. Now, they're not going to step in here and load the boat on SPY. It'd be hilarious if they did, but they're not doing that. Ryan Cohen is not going to do that. So the market is not crashing. Companies are still reporting healthy earnings. If you want to talk about a correction or a crash, I mean, GameStop's price action is more emblematic of that. Over the past month, 26% down than anything else, which I believe is due to, as you probably know if you've been following, a series of swaps in excess of $250 plus million. Now, what else is going on? Urgent breaking news on GameStop stock. Renaissance Technologies, Jim Simon, the late great Jim Simon's hedge fund, may he rest in peace, added 1.7 million shares of GameStop in their latest 13F filing. Why is this relevant? Who gives a rip? Reese Politics. It's relevant because this is the best performing hedge fund of all time. So if you see bullish people on Reddit talking about GameStop, or you're beating the table for deep value play here, look at what the best in the business is actually doing, where they're putting their capital. They went long GameStop. Now, this does need a bit of a fair warning that Ren Tech, as they're nicknamed, they like to trade stocks in and out frequently. So they might have bought, here and dumped it here. Okay. Or, they could load here, dump it here, reload here, dump it here. So they're more of a quant, super high intense mathematics type fund where they're buying and selling. That being said, they are the best performing hedge fund of all time, and they just bought 1.7 million shares of GameStop. That's very reassuring. And if you look at a couple other 13Fs here, Van Eck Associates, 1.1 million GME shares. That was reported on the 13th, which was yesterday. So that's good. Now, as of this morning, when I'm recording this video, I did see another interesting one. Jane Street went long another 3 million shares of GameStop. Their total position now is $109 million. So I'm definitely encouraged by some of the big institutions buying GameStop. Now, let me know in the comments what you think about this. Are they just loading the boat to stockpile the lend pool, to lend out their shares and just take the fees? It's possible. I won't dismiss that. Let me know your opinion. I disagree with that, though. I think I used to believe that. Now, I'm really just of the mind that this is starting to look really good, and you do not have to have, all of your series exams passed to understand this. You don't have to have, 30 plus years in the markets to understand that this is due for some sort of relief, especially when the underlying business model is getting better day by day. So, quick interjection here too. I wanted to thank everybody for supporting the videos, commenting. Great discussion. Even the bears coming out and commenting and giving their opinion. I like hearing that as well. I'm not just in this repeat chamber of consistent bullishness. I like hearing the bear case too. I think it's very valuable. I want to say thanks for subscribing. Thanks for liking the videos. You guys have been great. So what are we going to talk about today? Well, in the event of a real market correction, which, I guess we could see, let's just play that. Now, I think we're going to bounce here, and this is probably the bottom. But if we did see something worse off than what we're seeing now, I mean, this bear flag here almost played out to a T on Bitcoin. This would be an opportunity, if this were the bottom, for Ryan Cohen to beat the table and say, I love Bitcoin. I love it against inflation. I love it as a bet against inflation, all of these different things, and add more to their treasury. He could certainly do that. Now, his cost basis for GameStop was right around 108,000, to my knowledge offhand. So that would be, they're down about 10% on that. Not very good. He didn't buy the top, which is good. But if you look at Ryan Cohen's history of investments and his personal track record buying GME, Wells Fargo, Alibaba, Apple, he has a great cost basis on any number of those equities. So I would trust him to defer to him if he wanted to add more Bitcoin. What is my opinion going to do for the company there? Nothing. Absolutely zero, zilch, nada. They don't care. But if this were a bigger correction and Bitcoin continued to slide, they should add. They should add now. And that's me saying that in terms of, if they don't have any other M&A prospects lined up at this juncture, why not add a few more $100 million to the Bitcoin treasury? Now, again, that's probably a pretty controversial opinion, because I think people see Bitcoin, some people still see Bitcoin as this very high risk asset. I don't anymore. I mean, all the large banking institutions are all over this thing. It's much more, a 3% down day in Bitcoin is nothing like it used to be in the past. Nothing. So I think it's wise for the company to do that. Now, in a real crash scenario, they are sitting on a war chest of capital. It would be so counterintuitive for the forces that be, the market makers, the hedge funds, the short sellers, to keep suppressing or driving down, failing to deliver these stocks, whatever it may be, because Ryan Cohen can come in at any point and press the button. Whether that means there's a company that's at risk of bankruptcy, he could swoop in and acquire, whether that means he can load up the Bitcoin treasury, whether that means he can go into Ethereum, which is also on sale. It's up to him. And they're almost, I come back to this sometimes, and I think about the 35,000 foot view on this is, GameStop has so much cash now where a market correction and a crash would be the best thing to happen to the company. And yeah, it would stink to be a shareholder of that. GameStop goes below $10 a share, which I think is not happening, by the way. Let's be clear on that. But if it did, GameStop can deploy that capital for any number of one of those things I just mentioned. And in the event of a quick market correction to the upside, we'll be sitting extremely, extremely well positioned for that. So, it's kind of the darned if you do, darned if you don't type thing for Ryan Cohen. But my point is, he has the track record that we should trust him on this endeavor. So again, let me know what you guys think he should do. Is this a good time to load up for GameStop's Bitcoin treasury? Should they hit Ethereum? Which I think is, they specifically told the board and the shareholders that he had board approval to buy Bitcoin. I don't know why they would buy Ethereum. I don't know if he's eligible to do that, if he would need board approval. We don't know those details. So we'll just say Bitcoin for now, but Ethereum obviously looks really good too. I would be bullish on it. That being said, GME utilization 100%, and it has been dinging this 100% mark over the past 2-3 weeks, obviously, I think because of swaps. But this is a very good sign. What does utilization mean? Via Ortex, it is essentially showing that they are exhausted with borrowing shares to short the business, that there's aggressive shorting and there's aggressive borrowing, and the signals are flashing. Now, there has been a huge streak, I think, in 2022 where this thing was like at 100% for a long, long time. I mean, the span of like 3, 4, 5, 6 months. So, we have room to go. But I would argue now that there's more ETF shenanigans presently today than there was in that time. So to hit 100% utilization is a very good indicator to me that this could be a slingshot effect in the near term. And I'm not saying that in any sort of financial advice way. I picked up shares in pre-market this morning, not many of them. Okay, but I picked up more because I think that this is a price point that, There's clearly aggressive shorting with utilization. There's clearly opportunity for Bitcoin to deploy, or for, excuse me, 40 and slip there, for GameStop to deploy more of this capital if this market correction, pullback, correction, crash, whatever you want to call it, it's not a crash, continues. They can swoop in and do that. They are well positioned to do that. And then you have certain things like swaps being talked about, the ability of GameStop to maneuver through this landscape better than a lot of companies in the entire US stock market. It makes total sense to me that this would be a quick and slingshot-esque price activity. Now, swaps, I think they're more important, and let's keep an eye on GameStop's price today. I think they're more important than a lot of the things that we just talked about. So are these swaps just on GameStop? Well, typically, no. They involve a basket or multiple baskets of various different securities. So is there silver in there? Is there, who even knows at this point? But the borrow fees are still elevated. We have XRTs coming down, which is hopefully a good sign, but they have been borrowing. You have on GMEU, and again, this thing is just like, a trigger warning for me, but you have 28% borrow fee with 100,000 shares available. So what they're likely doing here is creating units of GMEU. You'll probably see a creation data where the shares outstanding go up today. You'll get that data on Monday of next week. And is this a time where they might try and take this thing off of Reg Show, which it's been on for, I think, another 10 or 11 trading days here? I would say this is probably an opportune time to do so. You have deep lows. You have potential end of swap roll activity here. It would make a lot of sense to see GMEU be lifted off Reg Show maybe sometime next week. Again, total gut opinion there, gut feel. Just kind of reading the tea leaves here on how price action works, when it typically has come off in the past, and what you see shortly thereafter. Now, when that has happened, you'll see rips in price. I would never, by the way, ever, and this is not financial advice, I would never buy a cent of GMEU. But, you can see that when those things come off Reg Show, GMEU or XRT, probably a pretty good indication that GameStop is due for some relief. Now, going back here for just a second on these 13Fs, they're not all rosy. I mean, you can see Jane Street went long shares, they dumped calls. That's not a huge deal. I mean, that's not something that you're going to lose sleep over. But there has been some selling, and I wanted to highlight a few, and you'll see a lot of green here. But UBS Group, who has long been rumored and thought, and this is just from reading the forums, this is complete tinfoil. They've been long thought to be holding Credit Suisse, their bags from their kind of blow-ups, and legacy GME swaps have rumored to be inherited by UBS. Now, UBS cut 2.3 million shares of GameStop, which I find super interesting. They also did decrease their put position, but again, for the derivatives, this is far, far, far less money than dumping 2 million shares. So why did they trim their position exactly in half? I'm not sure. This number is also a bit suspect to me, because if they are holding a legacy swap, you would think they would need to hedge that by adding shares and flipping long. So let me know if you guys have any theories on that in the comments. You see BNB Paribas cut 164,000 shares. Capital Fund Management dumped 256,000 shares. Bank of Montreal, from Ryan Cohen's hometown, dumped 900,000 shares. Marshall Wace LLP, they have a huge position. They dumped 1.4 million shares. So, our funds now trading this stock kind of like Jim Simon's Quant Renaissance Technology Fund, the late great there. I don't know, but if you're thinking about the long-term picture here, and forget that it looks like we might get some sort of slingshot in the near term on GameStop's price, if you're really thinking about this as what are hedge funds doing, who's buying, why would they not be loading the boat right now? And across the market, we could see an extended type rally across the broader market if hedge funds are scooping up this dip, and especially on a stock like GameStop, which is down almost 30% on no news in the span of, about a month here, or a little bit more. I mean, it's absolutely ridiculous. I saw a thread on Reddit basically where they're saying that, they're basically trying to gaslight us into believing that, this is all normal and the company's not doing well. And I think that really It's a bit dramatized, but I think that fits the point well. There's no explanation for this. You could say, okay, yeah, there could be, 4 billion of debt on their balance sheet because of the bonds, but that's a 0.0% coupon. I mean, it's completely justifiable as why you would take that. So I don't buy that narrative at all. And why would it just be selling off now? You can see, I mean, after the first bond offering, that logic disappears when you have a huge rip up in price, 61% off of that. So clearly there's more to the story here than that bearish argument. To put a bow on today's video, I don't see a crash coming. If it does, GameStop's well positioned. Bring it on. And yes, it would not feel good to be an all-in shareholder of GameStop and see it come down much further. It's not going to feel good. My cost basis is looking very poor at this moment, but it does motivate me to add more at these levels and be more excited about what could happen, even if the broader market does pull back. I hope that helps, guys. I hope everyone had a great week. Let me know your thoughts in the comments, what you want GameStop to do. Is this the time to deploy the capital, or is it time to sit back on your hands and wait for greener pastures? Thanks, everybody, for watching. Take care.